Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.
Hi and welcome back to The Conscious Day Trader. I am Yanis and today we're going to break another ICT 2022 mentorship trade on the pound dollar, and it was a good day. It's coming to the end of January and the 10K month is still looking good. We've added another, let's jump onto our journal actually and we'll see that together. These are the profits from today, $510 on going long on the pound dollar. And if we jump onto the trading trade sync, which is the journal I'm using, we've still got one more day, but we're sitting on $10,980. So an extremely good month and super happy about that. But let's jump onto TradingView and I'll break down the entry, exit and how I manage the trade. It was a bit of a tricky day in terms of because it's Monday and we're coming back from the weekend. So the analysis has to be spot on. And I had to do some correlations between the dollar and the pound dollar and the index, which I'll show you, and how I looked at both these charts to make my bias for the day and how I executed the entry. Make sure you like and subscribe to the video and comment if you have any questions. I'm pretty good at answering to every single comment. So I want to keep that up and make more content for you guys. So make sure you do that. But let's jump onto our bias and how we create a long bias, how I was long on the pound dollar. We're going to start on the daily. And as with always, all the videos, you'll see that we'll add a daily line onto the previous day high and a day on the previous daily low. It's good to label these so you know what you're looking at. Equilibrium is I take the Fibonacci level and I take the bottom all the way to the top. That would give me my 50% line, which is basically the equilibrium of the price. So if you're below that, you're looking at discounted price. If you're above that, you're looking at premium price. If the price is below, you're looking for opportunities to long. If the price is above, you're looking for opportunities to short. However, that being said, if the price is above and you have a strong bias that the price is going to go and take liquidity on the upper side, then you can still be long, and same with the discount. But you have to be a bit more conservative with your pips, because obviously you're trading in a premium environment, and that means that the price is quite premium price for the session. So let's see what we saw in the London session, London kill zone. I was up quite early today, so I could see the move from the beginning. I was up London time 6:30. So we'll go on to the 15-minute, the replay onto 7:30, 6:30. That's when I started looking at the market. Now, what did we see here? Why did I go long on this? Because we are in a premium environment. We're above the equilibrium, so technically we should be wanting to short. And also, the market, if you look at it, it's on an uptrend on the 15-minute. And if we go back into the 27th and 26th, we hit these equal highs, which took out equilibrium above this level here, and it created this area now, which will be interesting to see what happens during this week with this area above here, which will be your buy side liquidity. So that was an area which sitting above the previous daily high. So that is something that I was interested in. I think the market will want to go up. Is there opportunities that if I'm wrong, there's other reasons that the market will want to go up? And if we go back onto the 1 hour, you'll see that on the left side of the chart, we had this move that came down, came back up, and came and created equal high lows on the bottom of this. So this is where your area will be your sell side liquidity. And below this, we were looking on the left side. If you remember from the other video, we didn't have any clear fair value gaps on the 1 hour here that the market want to come and take out. So this is interesting because this sell side liquidity will be taken out with these equal highs. When it's going to happen, and this was is it going to happen in this session? We'll see if that happened. And all these things you have to start thinking about when you're creating bias. This is 6 o'clock, and I'll show you how I analyze the chart. I was originally going to go short, but because I saw this fair value gap here, I changed my bias to the long side. And that fair value gap, if we go on to 15 minute, that the market will potentially come and take out. We also saw that this fair value gap has been tested, and it took the market all the way down here, filled and touched the top of this fair value, and then it went all the way higher. Where did it go? It went on the other side on the liquidity, on the fair value gap of this move that the price came and touched, and then it was selling off. And potentially coming back to equilibrium. So my play after I was my beginning of the analysis was that this price is going to come down to the fair value gap of the 1 hour. But then I got fearful, and I'll show you where on the 1 minute, and I changed my bias to long. I don't often do that, but I was quick to analyze and close the position when it was nothing like $4. And I reassessed my bias. Now, both trades would have worked. And this is the interesting thing. You can be going long and short, and you can find opportunities in the market. So let's see what I saw to go short, and then I canceled the trade to go long. This was the open. This was the pre-market, and we saw that break lower. And then we saw this fill here on the fair value. Now, everything was looking good, and I wanted to short this into equilibrium, okay? And that would have worked, and I'll show you that. Price came back, and as we said, we had that fair value gap on the 1 hour with this big wick on the bottom here that hadn't filled. So multiple areas, liquidity around here that the target could have been. So if I had stuck with my trade, I would have still been paid. But I was not comfortable with this trade. I go on to the 15 minute. We had just broken these highs here. And remember, on the long side, we broke this structure out, and then it came and filled this fair value gap here. So I was worried that this position was just a continuation of this move. And I wasn't happy to trade that to deal with that side of the trade. So I killed it, and then I changed my bias in going long. And the reason I was long, I had, we're going to see that in a minute. And I explained that I wanted, even though it was a premium, I thought that the price is going to come back down to equilibrium and get a better price. But sometimes you have to see, you have to wait. And that's what I had to do. And as you can see, the market came straight into through equilibrium, filled the fair value gap, and I would have been paid quite nicely from this trade. It would have been an easy 21 pips. However, that would have been only one position, so that would have been my $200. However, what happened, as soon as we filled this fair value gap, and I closed this for a very small profit, and now I was long, and we had the price in equilibrium, below equilibrium, and filled the fair value gap. I was happy to take a position here. So as soon as this break happened, I was waiting for a fill into this fair value gap. And as you can see, that fair value gap there got filled, and I was entered here with a one position, and then it came back down, and I filled my second position, and it never broke until, so at this stage we were in profit of 11 pips, so that would have been again $200. Quite far off our profit, and then it kept going up, and then it came back down. So this is an area where you're starting to think, wow, so this pushed all the way up. I could have closed for 20 pips, so $400, but I was confident that this price is going to come up and take care of business about this buy side liquidity here. Above me, I had the fair value gap, and as you can see, this red line is the 124 a round number. So I was quite comfortable still with my trade because I was in discounted area and we're trading. We've been selling from the morning in the London Open, so I was quite confident in this trade. I still stuck with my 2 positions, and what I normally do here. So I had my 1 position on the top, 1 position on the bottom. As the price came above, I would have closed that position, and when it came below, I have 1 more position that I can get a better price. So I'm decreasing the risk by decreasing my lot size. So from 2 lots, I've gone to 1, but I've also now positioned myself in a better place for the trade. So I'm not only decreasing the risk, I'm getting a better price. So then when my trade goes better, I can close the trade earlier. It doesn't have to go all the way to the top. And as you can see, it grinded itself up and we got touched there. And that would have been from this position to that is 30 pips plus my original position, about 20 pips. And because of the shuffling of the trade, I was able to get a better price. And these positions here, I was entered at 123749 and 123777, which were, in my opinion, were quite good entries. 123777, that would have been at the bottom of that fair value gap. So really good trades. And my thesis was that the previous day is going to be broken, but being Monday and coming off a big week where we had ICT commenting on the videos, one of the videos blowing up for 13,000 views. And I just wanted to have a solid day with getting paid. And, you could have argued that I could have trailed my stops and so on. And that's something that I'm working on. But again, if I had trailed the stop here, that would have been a nervous point. And as you can see, you could have traded this break as well. You have these fair values areas here. Price skyrocketed to the top there. And did it break the top? Let's actually go to the current time. It went all the way and failed to break the previous daily high, which is quite interesting. However, it did fill that fair value gap on the left side that we're talking about on the daily. And it came close to that buy side liquidity on the top. So unfinished business, came back to discount, and now is trading back up into that level. So a really good day, and it was quite a clean trade apart from dealing with that wrong bias in the morning, which we wouldn't have been wrong because I would have been paid here. And this is something to stress. A lot of people get so focused on the bias. If you are able to manage your trade and you get your wrong bias, but you're quite conservative with your pip count, you can still get paid even if your bias is wrong. I was quick to realize that this fair value and potentially the above fair value might not get filled all the way. And you can see it did get filled, most of it, so it would have been fine. However, one tip that I will give is be meticulous with finding your bias. But even if you have the wrong bias, get in a position where you can get out of a bad trade. And this is the key. Find areas where the price can either target towards a fair value gap, either a sweep of liquidity, and make sure you use that as a way to get in or target for every trade. And as you can see on the journal, let's jump back onto that. We've got one more day. So we're having all greens days, which has been a really good month, and hopefully we'll continue that in February. However, I am moving to Bali, as a lot of you know, And a lot of these videos will be done in Bali, Canggu. If you're anywhere in that area and you want to hook up, let me know. But apart from that, I hope you enjoyed this video, and I'll see you tomorrow for another trade. I have been staying off a little bit off the DAX because it is quite expensive, and I'm trading 2 lots, and I wouldn't be able to trade it easily with my current situation on my broker, because I couldn't open a third position, a third lot size on the indice, but I can on the pairs. So that might be something for the future when I get a bigger account. I'm very close to getting a 150,000 account now on the next milestone. So life is good, and I'll catch you tomorrow. I hope you enjoyed.
Run it, I can't take no loss.